the number one thing you should think about is whether or not this particular industry has just come off of a bust. The deeper the bust, the better it is for you. The more chances you're giving yourself that this can go in your favor.
Welcome to the My Future Business Show, where we get you in front of your best audience and keep you there. Not only are we interviewing the biggest names in business to help you become even more successful, we're inviting you to book your spot on the show to help you grow your business. So at the end of the call, make sure to book your spot on the show by visiting myfuturebusiness.com. Hi and welcome back to the My Future Business Show. It's Rick Nusky. I tell you what, do I have somebody very special lined up for you. It's Lior Gantz. Now, Lior has been on the show with me in the past and we've welcomed him back because he has got such a wealth of knowledge. We're going to be touching on stock markets, real estate, investments, blockchain, you name it. We're going to be talking about it today. So with all that being said, Lior, welcome back to the show.
Thank you for having me.
Yeah, absolutely, my pleasure. Now, you and I were just speaking briefly about, the pandemic, and I'd love to explore some of the questions around this, because I know that you are deep involved with all of these things, and I wonder if we can start off before we do that is by asking you where you're located.
I'm in Tel Aviv, and right now, as we're recording this, it's the first day of February 2021, 11:30 a.m. here in Tel Aviv, and 3 p.m. I have my first shot, my first dose of the Pfizer vaccine.
Oh, wow.
Yeah, so we're pretty advanced in terms of vaccinations. I think there's about 9 million people in Israel put together. I think 2.5 to 3 million people have already been vaccinated. Mostly with the Pfizer vaccine, and the Moderna one is coming now. Now, I know it's a very controversial subject with the vaccines, so just to say, I've interviewed on my show Del Bigtree, who's a big anti-vaxxer, who got demonetized and banned from YouTube, etc. And actually, Robert Kennedy Jr., who is not only a big anti-vaxxer, he's a lawyer who sued a lot of he's obviously uncle with the late JFK, but he's the son of Robert Kennedy.
Yep.
They made a big Hollywood movie out of him because he, not under his name, but under a pseudonym, but he went after like Big Pharma and he got a big foundation with regards to people that think that their children have either dyslexia or something else due to vaccines, etc. He's just warning about vaccines. And when Trump got elected in 2017, he wanted Robert Kennedy Jr. to be chair of like a committee that investigates, vaccinations and mercury and all that kind of stuff. And actually, he says that Bill Gates came into that meeting later, like after Kennedy left the building. Gates came in and told Trump not to go down that rabbit hole, whatever that means.
Yes, no.
But, pros and cons and everything, and the way that it's structured here with most of my building and most of my where my daughter goes to kindergarten and just everything that's going on. It's a question of, okay, there's risks, there's rewards with the vaccine. What do you do? And I think for me, it came down to I just want to get on with my life. So having that vaccine is I would say at this point it's kind of worth the whatever the risks. It may be worth it. We'll see. Maybe it's a huge mistake, but it may be worth it just to get on with life.
Well, look, Lior, no matter what you do, look after yourself. I think that's probably the number one message that I'm taking from what you're sharing with us. And thank you for sharing that little bit of insight now. This show is predominantly going to be focusing on the pandemic in terms of not the political sphere, but more so how the pandemic is affecting the things that you're directly involved with professionally, Lior, such as the stock market, real estate, and all that sort of thing. Now, with COVID-19 and, with borders closing, left, right, and centre. In every country, you're seeing it. No international flights in or out. Does this
Yeah.
does this change the way that we deal with each other from country to country? Does this end globalization?
It's a very good question, actually, because it certainly has ramifications on globalization. I wrote about, I called it peak globalization, and I wrote about it about a year and a half to 2 years ago, because when I saw Trump's policies and just in general the rise of China versus the United States, it looked to us even 2 years ago that globalization is peaking. We looked at other indicators of globalization, and it just looked to us as if the world is kind of nationalizing. Obviously, you see a wall with Mexico. That's a clear sign of going back. With robotics, with 3D printing, with AI, with everything that technology is bringing into manufacturing, the advantages of labor cost arbitrages between the Far East or South America, Cambodia, the 50 countries that are actually producing for cheaper than China.
Mm-hmm.
That's what are the world's countries that have cheaper than China manufacturing. Even with all of that, it became politically incentivized to look at better ways of manufacturing. For example, in the United States, they cannot rely, and the pandemic proved this, on having their medicine produced in China. That's a big problem for them. 80% of global air conditioners made in China, 64% of shoes made in China. It's just a problem because you're relying too much on this global supply chain. It's very delicate and it's very efficient because you're leveraging the entire planet, right? So on one hand, amazing. On the other hand, very delicate. And so what's happening in the United States and what's going to happen in the next 20, 30 years is you're going to see, for example, New York City, it's going to be a hub. People are going to work there mostly with their brains, less with their hands. Outside of the city, an hour and a half outside in the suburbs, there are going to be big manufacturing facilities where they will be able to manufacture anything the city needs locally, in-house. So in America, you're going to see big manufacturing coming back, and you're going to see that in many countries. Countries are going to rely on their own technologies for this, and that's one thing what we see changing big time. Obviously, the big paying jobs are going to be engineering these, not overseeing a floor. And that's going to be it's a good job, but most of the jobs are not going to be on the floor. That's going to be very much automated.
It's like the second coming of the Industrial Revolution, isn't it?
It is, yeah, it is. It is the second, but and this is a problem for governments because you're balancing the workforce or the workforce that's not suited to do jobs that are about creating software and hardware, etc. You literally need less and less people to create more and more productivity. And so you have a lot of people left behind in this type of economy. And therefore they're trying to balance this out with more social programs. It's exacerbating the wealth gap, the income gap. There's finger pointing, etc. And there's not only finger pointing within the country, there's finger pointing between countries. So a pandemic, a global pandemic, especially so well televised and communicated, it brought opportunity for all these nations, all of the big nations, to say, hey guys, G20 meeting immediately in Brussels. Let's talk about how we solve the pandemic together. Who gets the vax? None of that happened. Every country pulled back, looked to do whatever is good for them. Closed borders. It was all about limiting and going back to nationalism. And so that's another indicator that peak globalism is definitely arrived. In other words, when I say global, I don't mean that the poorer countries, the third world countries, will not get richer. I just mean that they will not get richer by U.S. corporations entering, fishing village, turning them into the next Beijing. That's what I mean by that. It will be done differently. The world as a whole is getting richer, getting better, the pie. But then our real problem as a society is how do we divide an ever-growing pie with fewer and fewer winners, so to speak. And that's sort of the big topic that both society, governments, but I also think corporations in the free market have to think about, because it's definitely not a problem that you can look and say, oh, Amazon, solve this problem for us. It's not a problem that one particular company can solve, but it does affect everyone. If there is a problem where riots are happening, where there's discontent, where people are just not happy, that's unproductive for society. And if CEOs and boards of directors and companies don't start handling this, it will go down to governments handling this, and that might be less effective. So there's a big dramas going on everywhere. It's just
it's happening all over the place. I wonder, what's, I guess, your personal sentiment to the future? Is it a positive outlook? Do you see opportunities in hidden away in all of this, maybe hiding in plain sight? What's the good to all of this? Do you see any?
I think opportunities are always in plain sight, hidden in plain sight.
Yep.
Look, as an investor, what I gave you is more of a macro, outlook, and the macro outlook is not so much something that an investor in the stock market or in real estate or whatever else can make decisions from. The macro is more of what you would do in your own free time. In other words, you see a wealth gap and you're a beneficiary of the system. For example, you've made millions of dollars. Why don't you go back to your community and help it? That's something else, right? You're seeing the wealth gap, you're seeing the income gap, you're seeing people that it's more of a philanthropic feeling, or because I'm not going to hire to my business somebody that's unemployed just so I can hire him. It's not the way to run a great business. I would rather run a great business, and with a percentage of the business profits that are distributed, that I go back to my community and say, okay, how can I help this community? Not by hiring people just for the kicks of it, because that's the way to go, but how to help, how to really help. What do these people need, and what can I do? So I think the macro is more for people to go back and say, man, if these people can learn a new skill, then that would really be beneficial. Can I buy 100 Napoleon Hill books and give it out to these people and create a book club? Because those people can't afford the book, for example, or won't sit down and read it. There's a bunch of things that you can do philanthropically, or just in terms of volunteer work. In terms of business, or in terms of an investor, there are big opportunities with every major change, right? And this would happen in 2020 is a huge change. So in terms of what I'm looking at and whatnot, one, real estate in the United States, a tremendous opportunity. I think real estate in the United States is now more compelling than in the past 70 years. Let me just give my bullish thesis, and then you can do your own due diligence. The inventory for housing in the United States is the tightest it's ever been. If construction stops for 3 months, there will be no new housing in America. That has never happened. Usually you have a 12-month oversupply. So in other words, if all construction stops, there's 12 months worth of inventory to go and sell. There's 3 months now. Remember that. That's really important, because what people are saying is, man, for 12 years, real estate prices have gone up since 2008. That's true. But take into effect that you're taking an arbitrary point, 2008, and saying from there. But we've never had a 50% decline in prices in the United States to go into 2008. So that was a really one-of-a-kind event for prices to go down that substantially. Was preceded by a rally in prices. But anyways, supply and demand, the basics of any market. There's a lot of demand, very little supply. So that's one thing. Second thing, a lot of states have migration right now. There's states with better taxes or no state tax, better weathers, better job creation prospects.
Prospects.
Yes. So that's going on. And then the mother lode is basically the fact that Gen Z, which are Generation Z, right, mid-90s to mid-2000s, and millennials, mid-80s to mid-90s, they're entering these peak earning years. They're inheriting great jobs from Gen Y and from boomers that are retiring, and they're climbing up the corporate ladder. They're all entering their 30s, many of them not married and still living either rents or in a unit at the back of their parents' house. And so you have this entire generation, think between 80 and 100 million people, that's a third of the country, that have not tied the notch, right? They've not gotten and have not formed a house. They've not bought their first home. They've not originated a mortgage. They've not done any of that. Most of them have great credits. They were not burned out in 2008 in terms of their credit, and they've been building it. Most of them have savings. Most of the people that will buy their first homes have some savings, whether it be from the last 8 months of bull market in the market that they can realize the gains and put a down payment towards, or just in general. And a lot more of them have college degrees, which banks look at when they process your application. Very bullish on real estate in the United States. What kind of real estate then? You have single family homes, because people are afraid of the big cities, pandemic, etc. They're moving outside to single family homes. So that's one thing that's really interesting. Secondly is multi-family complexes, huge, $400, $500, $600 that you don't buy on your own. You go into either a private REIT. So if you're an accredited investor, that would be easier. But even if you're not, there are ways to do it. Even if you're Australian, you can look at certain opportunities within the United States through very, very hands-off websites where you can buy, even like 5K or 10K or 20K into a big project, a crowd-funded project.
Yeah.
And there are many companies that do that. And if you go to wealthresearchgroup.com, to our newsletter, you will and subscribe to the free newsletter. You will see that we talk about these all the time, and even I talk about what I'm doing with my own funds. So real estate, love it. Real estate is a great catalyst for what's going on in the real economy, because if real estate prices go up, not only do people have lines of credit, but in order to pay off mortgages, they have to have stable jobs and good jobs. So a healthy real estate market is a precursor for a good jobs market. So that's the second thing, that wherever you see great real estate markets, those are also great job markets, and those also are part of the new U.S. economy. Where do I think the U.S. economy is going? I think for one thing, you need to look at, as an investor, you need to look at specific companies. The S&P 500 index and the NASDAQ 100 and the Dow Jones, they're priced very expensively. So it's true that over the long term, if you continue to just purchase more and more of the S&P 500 and the Dow and the NASDAQ in 20, 30 years, you'll have compounded at either 6, 7, 8, 9% a year. It's true. Yeah. But for the average person who's willing to devote a few hours to researching specific companies, or what I do, researching specific people and looking at ways to get access to their data, either invest in their fund or just be part of their network. So in other words, hunting for an expert instead of hunting for companies. Hunting for an expert is much better because he does the most of the work, and you just hunt one time for the expert instead of hunting every day for new opportunities. So I think that offers much more leverage. And looking at specific companies, I think specific companies which carry obviously more risk, that's where you can make 20, 25, 30% a year if you're a small time investor, because you're not under these regulatory umbrellas that fund managers have. I'll give you an example. Fund managers, if one of their stocks in their portfolio goes up by 100% and now weighs more than 10% of their portfolio, they have to sell it. They have to sell a portion of it, even though it's a phenomenal company, just because it's too overweight. The fund's board will tell them, hey, this is too much exposure for one stock. They have all these non-related requirements that have nothing to do with the fundamentals. You as an investor don't have that. You could put 90% in a high conviction idea. I'm not saying that you should do that, but it's something you have an opportunity now as an investor because of the access to information that's out there. You have a real big shot of outperforming Wall Street, and we're seeing in the past 9 months that the average investor, when I say average, I just mean a non-professional and whatnot. And I'm a non-professional. I know you said like a few minutes ago that I'm a professional. I'm a non-professional, I'm an individual investor. They have a real big opportunity. So I love the opportunity right now. In terms of listeners, they're saying, hey, you know what? Look, the markets are out of control. They're expensive. The PE ratios are the highest. It's true. The thing is, PE ratios are not how you measure broad indices anymore. You cannot look at PE ratios the way you looked at it 20 or 30 years ago. They are expensive, but the S&P 500 today and the NASDAQ 100 today, they're built of companies that their policy is not to take the profits and distribute them as dividends. It's to take the profits and plow it into the company in order to build its market share, and then either move in 20 years, 30 years down the road to that dividend model, or get sold out to a bigger company for who wants them as part of their bigger strategy. P ratios are not the way you look at companies today that much. The better way to look at companies is more of their overall growth prospects. So I would say free cash flow is not the only way to do it these days. So don't look at it and say, oh my God, you know, I'm waiting for a 30 or 40% correction in the markets before I ever get in. That may never come, or not never, but that may not come.
You'd be awaiting
7 years.
You'd be waiting a long time, wouldn't you?
We just had one, Rick. We just had one last year. We just had a 35% correction, bear market in March of 2020. Like literally, not even a year ago. It's not the strategy. Even if and a lot of people have this mindset of either all in or all cash. It's just why.
It's not the way it's done anymore, is it? I wonder, Lior, you are such a wealth of knowledge. What I will say to everybody who's on the call with us tonight, it should be obvious to you that Lior is a wealth of knowledge, regardless of his professional status or not. This is why I want you to make sure that you reach out to his website and you get a hold of this newsletter like I have, because there is just an abundance of information. Now, that aside, Lior, I'd love to talk about every 4 years, the transition of power in the States, rightly or wrongly, seems to have an effect on people's psyche. What do you see happening? What have you seen in the last few weeks, considering what's just occurred?
That's another great question, actually. It's not natural for any organization to simply pick a 4-year period and just choose to elect a new leader, which comes with a new policy. And no organization who wants to be healthy would do that. But because of the democratic principle of limiting power, most modern countries do that. They just every 4 years say, okay, election, let's find a new guy.
Let's do it.
Now the good guy, the current guy can be perfect. Wouldn't matter. He can get elected, but even then, after 8 years, even if he's phenomenal, he's going to be out. And not only that, but even if he's a perfect leader, when it comes to campaigning, the other person will somehow smear him. No matter, in a corporation, that would not happen. If the current CEO is amazing, another candidate will never come out and
berate them and yeah.
He's bad because he'll be what? He's not bad. He's good. Look at our results. Look at, okay. So countries have a very arbitrary way of electing a leader, and the added problem to that is when a new leader comes in, he has this thing where the first 100 days I have to change the whole thing.
Change the world. Yep.
And it's so I literally wrote about this like a week ago on our newsletter. I wrote about you take the sweat, the man hours, the amount of time that a Trump administration, for example, put into their policies, and now you undo that. No matter, leave alone if it's good or not.
Yes.
You unpack that. They've put in tens of billions in taxpayer money into doing this. Now you're going to take 10 billions to destruct that. So in 4 years, it's just a very inefficient way of running an organization, especially the size of the United States. It's with about 16 million federal workers, you move 16 million people from. It's just insane. And that's why that's why there's a deep state, because the people that are in these machines for 30 years, they can't swing every 4 years. They have their own little state of mind within the bigger picture, because they can't fluctuate every 4 years with the tides. They have to run an organization. They really run in organizations like agencies, etc. And so that's why you see those conflicts between elected leadership and the people that are the real puppet masters behind the scenes.
Oh yeah.
Yeah. Okay.
Go ahead.
Now, so the bottom line here is that there are opportunities that come with the change, right? So, for example, it's obvious today, when Biden got elected, and even going up into it, when the polls showed it and people began to think that the polls might be more accurate than 2016, then investors went into clean energy, whatever infrastructure, whatever they thought Biden's administration would do. So there are clear opportunities with policy changes, but there are also opportunities with just companies that have a clear competitive moat within their field. So, I'm looking at companies that Biden's administration will favor. I'm also looking at companies that just, no matter what happens, these companies have something special, and I just want to buy them for the right price. There are companies that I can wait like a year and a half, 2 years, because they're a great company but not a great opportunity. So, okay.
There's a lot of buy and hold opportunities. This is great insight. Thanks, Lior, for sharing. Now, I want to shift gears a little bit and talk a little bit about stocks. I want to talk about something that recently came to everybody's attention, is the GameStop and Reddit user situation where they were short squeezing the market. Did you hear about this?
Yes. I'm alive. I have a pulse.
Now, I was wondering what you can tell us about this, because it was a quite unusual situation, and wonder why it occurred, And what is to stop this from occurring in the future? Power of numbers.
Yeah.
It's really interesting.
Okay. So a number of things, because it's a very complex subject with so many angles, both ethical, moral, practical, right? Regulatory.
Yep.
The one thing I would say off the bat is anyone that comes in defense of short sellers, saying that short sellers help to bring to light fraudulent companies, is making the wrong claim for short sellers. Short sellers, it's not their job to unveil companies with fraudulent activity.
Yeah.
Leave that to the proper agencies. Melvin Capital or anyone that shorted GameStop did not short this company because they thought there were shenanigans going on within this company. They thought their business model was obsolete, and they betted that the risk of this company ever turning around compared to the reward of this company not being able to turn around is to their favor. That's the only reason they would do that. As part of the short seller strategy, they sometimes take their research, which is amazing, right? They have a year and a half where they put 40, 50, 60, 100 people on the task. They literally go to the locations. They do all this research in order to compile that thesis, because a fund manager has to answer to a board, to his investors. He has to say, look, I'm taking a big risk with this, but it's going to be worth it for everyone. Look at all of this research. So that's one thing. Whoever goes on NBC or CNN and says the short sellers are an important part of the ecosystem because they unveil fraud. No. If they want to unveil fraud, just call the proper agency. You're trying to make money. You're not trying to unveil any fraud. Unveiling fraud is an indirect way for you to make money. So, and by the way, they short legitimate companies. They short commodities. They short a lot. It has nothing to do with it. And I saw so many people defending the short sellers by saying that they're just an important part of the ecosystem because of their because they expose things, and it's just not true.
It's not true.
Yeah, I don't know who they lobby for, but those people are plain. This is one thing where it's plain wrong, just plain wrong. There are many that are, you can debate them. This is plain wrong.
Well, I got to say though, I mean, I love the fact that you've got a point of view and you bring some clarity around this, because there are lots of people out there that just don't know Lior. Yet again, another reason to get their hands on your newsletter, I would suggest and absolutely recommend that you do that. If we could, Lior, I want to go back. You talked about clean energy momentarily there. I'm thinking about with all these executive orders that have been signed recently with the new administration that's coming through, they're now pushing this new agenda for clean energy. In terms of stock, I'm seeing personally rises in stocks of lithium, iron, and molybdenum. Should you be looking at getting involved in that industry at the moment? Is that emerging, or what's going to happen there with the clean energy market, do you think?
Okay, so for example, lithium is important for the batteries of EVs. Iron is just important because Biden said that he wants an iron renaissance in the United States, and he wants them to be iron independent. So that's why people are buying iron. But when you invest in the companies that mine the actual commodities, you're delving into an industry that the management teams are in charge of two things. Cost, so bringing down their costs at all times. Okay, that's the one thing that's really important for these companies, because they don't control the price of the commodity. The commodity, it fluctuates in the free markets, and as an executive, you can only control costs. So that's one thing that these companies are always focused on, is just cost. And then the second thing that they're constantly thinking about is how to replace basically their depleting asset. So think about like a Nike, right? What do they sell every day? They sell clothing, And when they run out of clothes, what do? They just manufacture new clothes. So their asset, the clothes, they can replace them.
Somewhat renewable.
Yeah, they can just do more. With a mine, it has a life. That's it. It's once it's gone, it's gone. When you deplete the whole thing, it's gone. So
I think of an analogy when you say that. I think about the grape. You can only squeeze so much juice out of a grape.
Yeah,
you know what I mean. I always think about that.
Yeah, but you can plant new grapes, etc. Right?
New grapes.
Yeah. Here, you wake up every day as a CEO of a company, and you literally go to your only asset, the mine, and you start emptying it out. So think about the absurdity of the business model, right? Okay, and then you also think about the fact that you cannot control how much you're going to sell it for. So that's why commodities are a very cyclical industry. They go through huge booms and busts. And the number one thing you should think about is whether or not this particular industry has just come off of a bust. The better it is for the deeper the bust, the better it is for you. The more chances you're giving yourself that this can go in your favor. But this is not a buy and hold business. Look at any major mining company over time, and you will see the chart just goes like this. It doesn't go up. It just goes up and down and stays within a range for 20, 30 years. So it's literally about getting in after a bust, going out near the top, going in after. Yeah, it's not like you look at the chart of the S&P 500, which literally just it grows over time. It creates more and more value. These companies do not. So first of all, go into it thinking I need to find an industry or a company that has been through a major bust. Okay, 30 to 80% bust. I cannot go into anything else, or I'm risking. I'm risking a lot more. Okay, so that's one thing. I really want to stress this because my strategy is always go into a company after it had a big bust in commodities, not in general, in commodities.
Yeah.
Secondly, these companies usually are very independent in terms of their price movement. So they'll move whenever something material happens within their own company. Whereas when you buy like a NASDAQ 100, if the whole market is moving up, the NASDAQ 100 is moving up. Here, you're basically marrying your fortune with this company being able to have a good drilling season, a good quarterly, mining production with no strikes and no problems and no, their pipes didn't burst, etc., etc. So they're very independent. If you want to win with them, you have to know what you're doing. There are obviously ETFs where you can offset this. You can buy a basket of lithium companies or a basket of mining companies in general. But the bottom line is these types of investments carry much more risk. They're much more time sensitive. You have to know exactly what you're doing in terms of getting in and getting out. And they're more hands-on. They're not like buying the companies that actually make the end product. You're really going to the source where the added value is minimal. It's a commoditized business, and you're basically banking on phenomenal managerial skills. So that's where I want to stress that what I look for, and I invest in mining companies, is I know the actual management team. I literally speak to any management team before investing in that particular company. I do not, or rarely do I invest in any company where I don't know the CEO and haven't spoken with them personally. So and that you can do that. Anyone on the call, if you want to invest in a company, reach out to the company, ask for 15 minutes with the CEO or somebody that, if it's small enough, right? It's not $1 billion company, because those would have their what's called an IR person, an investor relations person. But if it's a smaller cap company, you can definitely speak with either the chairman, the CEO, somebody, the president, and ask questions. Ask a lot of questions, because if they don't answer these questions properly, somewhere, it's like a little startup. They'll make a mistake.
This is sage advice, and this is, I know this to be true of Lior because I know that you're a connector of people, and I know some of the people that you know, and there is a wealth of knowledge through conversation, and you get a feel for how people operate, and the caliber of people that I've been introduced through Lior's connections is just phenomenal. So I'd like now, if we could, at the pointy end of the call, Lior, which again, thank you so very much for sharing. I'd like to talk a little bit about your newsletter and what people can expect to find here, because I know that you and I could speak for hours on end about different things, different investment strategies, all of which I suspect are wrapped up in your newsletter. So what are people going to find when they find you?
The idea of the newsletter is 3 times a week to publish, about 3 times a week, to publish information that is timely and relevant in terms of the global economics. So whatever is really important on my mind, whatever is really important to me, I publish. And the way I try to publish it is in 500 to 700 word articles that take between 5 and 7 minutes to read. And then I also add to that a lot of personal things that I'm doing. So in other words, if I'm investing in certain companies, then I would highlight those companies. I would highlight those companies. So it's very personal opportunities to myself. And that's kind of what we do. We marry the macro and the specific.
That's wonderful. Now, when
people
it's powerful. It's probably going to make people very more educated, more aware, and be able to make more informed decisions, which I think is really important here. Now, when people want to get their hands on this wonderful newsletter, Lior, where will they get it?
It's not like a physical newsletter, so they won't be able to get their hands on it, but they can definitely just subscribe on the homepage at wealthresearchgroup.com. I would also say that something that's pretty cool is if you go to the website, above and beyond subscribing, you can also click on the top menu. There's a button that says watch lists. These are actually 6 watch lists of companies it's a report. It's basically a PDF report with a watch list of companies, most of which I'm either invested in, was invested in, or waiting for the price to drop. And I've been publishing them since March of 2020, since the crash. So 6 of them. They contain I think 56 companies overall. Each and every company that has dropped to its noted limit order that I published as a reference point, because these are just reference point. Read them and then do your own review.
Due diligence.
Yes, of course. But each of them that actually dropped to that price, it ended up being so close to the bottom for that company. And obviously, it was a phenomenal year for the stock markets. But those watches did really well. So you can look at them just for retrospect. But we also published our most recent one in January. So that could be pretty cool to see what we just published 2-3 weeks ago.
I tell you what, I sit here and my ears prick up and I start listening intently, because every single time I have the opportunity and the privilege to spend time with you, I learn something. So I'm pretty certain that everybody who's on the call today have learned something from you as well, Lior. Now, for everybody who's on the call today, you need to visit wealthresearchgroup.com. Sign up for the newsletter. It's free. It has all of this wealth of information for you. And with all that being said, Lior, I look forward to spending some more time with you on the My Future Business Show.
Thank you, sir.
Thanks for joining us today. If you enjoyed the call, then make sure to subscribe, leave a comment, share us with your friends, and book your spot on the show at myfuturebusiness.com/interviews. And if you're looking for solutions that will help grow your business, then visit myfuturebusiness.com/shop.